After a few weeks of our banks being sold off on the stock market, the question is it time to forgive them and go long on banks? To answer this question, we have Julia Lee from Bell Direct. Julia, thanks for joining us on the show. Now, George Baburis says yes to banks. I wasn't going to ask about banks, but we got onto it. Then Ron Bewley says, yes, banks look good, like good value. What are you going to say?
Oh, well, I hate saying things that
agreeing with everybody else.
But
you're all smart. All my guests are smart. You know that.
I've been buying banks, yeah.
You like banks too?
Yeah, banks are good at the moment.
What you thinking?
There's been a huge sell-off, and I guess if we have a look at what's driven the bank share price, a lot of it has to do with global macro factors. And if we have a look at the global macro environment, we've seen this big sell-off in global bonds. So that's been happening for around about a month now,
Bond prices down, yield up, competes with the yield-playing stocks.
Absolutely. And
okay.
That's been having a negative impact, I think, on the global yield trade. Firstly, I think it's a demonstration on what happens when everyone sort of tries to unwind positions at once, a lot of volatility. So that gives us a taste of maybe things to come in a number of years. But secondly, I don't think the yield trade is dead, because I think globally we are in a low inflation, low growth environment. So while we do see volatility in bonds, it's not going to be a one-way street. So I think the bank's still looking pretty attractive. Secondly, I think from a domestic point of view, you need to consider what's happening as well. And I guess they are a leverage play in terms of the economy. We are starting to see consumer confidence tick up. The housing boom still going on at the moment, although there is talk of trying to sort of contain the housing boom.
But that's for price. There's going to be a lot of construction in the pipeline, which would be good for the economy as well.
Absolutely. And I think the last point for investors to remember is, just from an investment point of view, that May does tend to be a weak month for the banks, and that's because 3 out of the big 4 banks go ex-dividend. So I think there's 3 factors to consider. There's the global macro factors, which I think are behind the key long-term trends in the banks at the moment, and I think that's an important one to consider. Secondly, I think you need to have a look at the domestic factors, and part of that is the yield and the attractiveness of the yield to domestic investors. And thirdly, just from a timing point of view, May does tend to be a bad month for banks, because 3 out of the big 4 do go ex-dividend.
Yeah, UBS upgraded Westpac today to a buy as well, I noticed. So let's move away from the banks then. A lot of other dividend stocks have copped it, like Telstra as well. Do you think they're also going to be picked up as people say, look, these low interest rates are going to be here for a long time?
Well, I think the problem globally is the lack of high-yielding assets, and that's what's led to this hunt for yield, and that's led to the Telstras and the banks of the world, which frequently do have single-digit growth, but having double-digit stock price performances. And I think that's going to continue, although we will see a little bit more volatility. Gone are the days where you can expect to see, triple-digit bank gains over a number of years. I think those days are gone, but I don't think the yield trade is dead.
To me, it seems like, I mentioned this to George as well, if, for example, over the next 12 months, the dollar does go down to a better level where the RBA would be happy, it also would mean that, I think you made a point earlier off camera, that you're saying 50% of our market is now being bought by foreigners.
Well, I thought it was about 30% of our market, which was...
But you heard today it's 50%,
But someone corrected me and said, no, actually it's 50%.
So therefore, if our dollar spikes to 81, a lot of people could have got out at that point in time, couldn't they? Like, I'm shocked this is happening. I don't want to see this go to 82, 83 and lose more money. I'm out for the moment.
Yeah, so I think currency is a major factor at the moment, and I think that has been seen in just the velocity and the speed at which we've seen the correction in terms of the banks. When you see Commonwealth Bank from around the 96 level back down to the 81 type of level in a matter of a month, then there are other factors at play. And so the global macro factors play an even bigger part, because it is the global investors that are having a big part in those large cap stocks. So,
Julia, if the dollar eventually falls to where we think, a lot of those people could pile back in thinking, OK, I'm going to buy a great quality company. And this is the point. We're investing in funds now that trawl around the world trying to buy the best companies in the world. There'd be a lot of people outside Australia look at, say, CBA and say, this is one of the best companies in the world. I want to be in, and they pay good dividends. And if I get them at a low Aussie dollar exchange rate, I'm laughing my head off.
Absolutely. So the currency, and I think international investors do play a big part, and I think that was seen by the sell-off that we've seen in the last few days. The amazing thing about the sell-off that we've seen is that it has been on the big end of the market, and if you have a look at international investors, they don't deal in the mid-cap stocks or small-cap stocks, they deal in the top 20.
Yeah.
And if we have a look at where the biggest losses have been, it's in the top 20, which is unusual for a sell-off.
Yeah.
Usually if you see a sell-off in terms of the market, it's the small part of the market that investors, domestic investors, get nervous about the most and see the biggest sell-off. But in this actual case, the last couple of days, we've actually seen the big end of the market being sold off.
Julia, are you seeing some companies that are classic all industrial type stocks that actually have some potential over the next 12 months that you like?
I think Transurban, I think infrastructure is a big winner in terms of the budget as well. And we're starting to see some of those infrastructure stocks doing well.
Yeah.
If you are looking for exposure to infrastructure, the most highly leveraged to that infrastructure area are stocks like Lendlease, as well as the old Laytons, which has had a name change to CIMIC. So those would be some of the stocks, but all together, I think there is a bigger emphasis on looking for stocks for growth.
Yeah.
And we haven't seen a...
And industrial stocks are growth stocks, aren't they? And there have been, a lot of them have been ignored as we've chased the dividend stocks. But there could be some good value amongst those ones.
Yeah, and I think in terms of the Australian market, there are also some interesting opportunities as well. There's been some big pullbacks in stocks like Green Cross. They look at vet services and look at the pet barn stores as well. And we've seen a pretty big sell-off there.
Big sell-off there.
I think people are spending more in terms of their pets.
Yeah.
I was speaking to my mother-in-law who's just had her pet desexed, and also there was a problem with ticks, and $1,000 bill later.
Cool.
People are spending a lot more.
Okay, we must get the CEO Green Cross on the program, because Roger said that the management has changed and he's not happy with that. So we'll just wait to see what's going. Great having you on the show as always. Your show comes up next, and what a top show that is as well. Thanks Julie, for coming on the show. Well, that's my show for the night. If you want to read my thoughts each morning at the close of Wall Street, just check out my website, switzer.com.au. Thanks for joining me. I'll see you tomorrow night.